Everyone, Christian B. Burnaby, Vancouver-based real estate agent. Welcome to Rapid Fire Real Estate, where today I want to do a deep dive on specifically one topic, mortgage defaults, which are on the rise. And I'm seeing a lot of this online, and I want to peel back the layers of the onion here and see what's really going on. Let's take a step back. Let's look at the bigger picture. Should these stories of defaults keep us up at night, or is there reason to sleep soundly? And let's do that. So I want to start us off with two articles. First, from the TV news, Global Money here's got a headline that mortgage delinquencies rising with Canadians in fragile financial state. Yeah, that doesn't sound good. And so these ladies are talking about money matters. Now, if you read the first several paragraphs, it'll tell us the actual number of defaults has risen from 0.14 to 0.192. Okay, time out. What does that actually mean in real people? That means out of 1,000 people, 2 are not making their mortgage payments. 2 out of 1,000. You don't need to be worried about that, okay? And, let's go to the next article, and let's see if they have something more interesting to share, and they do, because this is courtesy of the Bloomberg, and they quote, CMHC says mortgage risks remain as delinquencies, defaults creep up, alternative lending grows. Okay, so we're going to learn something new here. Alternative lending is when someone cannot qualify with one of the big banks like BMO, CIBC, etc., they will go to an alternative lender called a mortgage investment corporation, in many instances, private lenders, and they'll get a mortgage. Now, the reason they do that is because there's something in their risk profile which is unattractive to the big banks. Maybe they've gone through a bankruptcy, lost a job, business, a divorce can often require people to go this pathway. And if you and I read the first several paragraphs, they're going to tell us the same thing here. People defaulting, meaning not having made a payment in the last 90 days, is at 0.19. So 2 out of 1,000, and that's up slightly. They're going to tell us, though, that the 90-day delinquency rates for mortgage investment corporations, that's MICs, short form MIC, has reached 1.15%. So that's 1 in 100. Yeah, that's concerning, but not unexpected. Remember, these are people who are having to go to to take an alternative pathway to get a mortgage. You would expect that if delinquencies were to rise, you would see it here first before you would see it with borrowers borrowing from the big banks like RBC. Now, here's the thing. If you really want to know what's going on, what we're going to do is we're going to go to the CBA.ca. And that is the Canadian Bankers Association. This is a trade association for the big banks, also a lobby group. And what we're going to do is we're going to look at the numbers that they have. And here you can see, this is fairly recent, only a few days ago actually. Read the latest stats on mortgages in arrears in Canada. So we're going to open that. And in 2 simple graphs, 1 stats page, you're going to get all the answers you really need. And they're going to tell us mortgages in arrears rate low compared to other advanced countries. Well, which countries are we comparing it to? Okay, we got the US here in light blue, Canada in purple at the bottom, and then the UK in between. Okay, you can see here, in the United States, this massive spike, up to 5% of defaults. When was that? That was the great financial crisis here, 2008, 09. And you can see what caused the meltdown in the U.S. was that 5% of borrowers couldn't make their payments. And this was because of faulty lending practices. I mean, they were giving $500,000 mortgages to strawberry pickers reporting no income, right? And a lot of this is, you can see this in the movie The Big Short or read the book. I recommend both. Anyway, once the financial crisis abates, it takes about 8-9 years, and the U.S. numbers come back down and then spikes again. And this, of course, is the coronavirus. The economy shuts down, and where the Americans are back to about 1.5 people out of 100 defaulting on their mortgage. In Canada, though, look at this. Around this global financial crisis, we actually had 4 out of 1,000 people defaulting, and that today is less than half of that. So when you see these reports online about delinquencies rising, or even from BNN, mortgage risks remain, it's not as serious when you take a step back and look at the overall numbers, and you compare us on a global scale as well, even compare ourselves to ourselves in the past. Another chart you may want to take a look at here, and it's all publicly accessible. It's all right here. Is the total mortgages for the entire country, right here, 5 million actually. And if you're thinking that's a small number, remember there's a lot of people who've paid off their mortgages. Grandpa and grandma may be living in a house a few blocks away. They've paid off their mortgages. I don't have the exact numbers of that, but it's quite high. And okay, so you got 5 million. Of those 5 million, just a little over 10,000 are behind. That means across the country, 2 out of every 1,000 people are not making their mortgage payments. And if we were to break it down by the biggest provinces, Ontario, those stats, the percentages are even less than that. And then in BC, where I am and where we, dear viewer, are, a little over 700,000 mortgages, 1,200 behind. Again, same as Ontario. Less than 2 out of 1,000 people are behind. When we say behind in arrears, we mean not having made a payment in the last 90 days. That's definitely a serious situation. That sounds like someone who is going to get foreclosed on. Now, why might that be? That they've ticked up slightly. And again, this is minuscule stuff, guys. Okay, now, mortgages in arrears, 90 days and over versus unemployment. This is a very helpful chart graph. You can see here the unemployment on the left-hand side, and you can always see Canada always seems to be quite high in the unemployment side of things, and that may be structural issues regarding our economy, such as higher taxes, which dissuade investment, and so on. Now, around the time of the Great Financial Crisis, our more unemployment rate jumped to about 9%, and then tailed off, and then jumped, of course, as the economy closed to a little over 12%, and then came off, and now we're getting back up to about 6% unemployment. And actually, this tracks with the default rates, and you can see our default rate right now is, again, just a little under 2 out of 1,000 mortgagers, borrowers. And so not too much to worry about here, to be frank. I mean, this should let you sleep well at night. These are minuscule numbers. This is like saying, scoring in the NBA is up 0.2%. If the average team scores 100 points, now they score 100.2 points, it's not even noticeable and makes no difference. If you want to do a deeper dive, you can actually open these PDFs here for mortgages in arrears, the historical data, and you will then see all those same regions. You can start with Canada going back to 1995, January, and you can see the number of mortgages, the number that were in arrears, and the percentage. So again, this is saying that out of 1,000, 5 out of 1,000 were not making their payments back in January of 1995, 3 decades ago. Yeah, I mean, these are minor numbers, and we're even in much better shape than that today, right? You can just scroll on down, and you can see we're at 0.2%. Not too much to worry about. And if you want to take an even deeper dive and look at household borrowing, this page and if you want to know how I got there, let me just see. It's one of these. You've got to open one of these, and anyway, it'll take you to household borrowing, and you can see some fast facts. They were telling us here that Canadians have significant equity in their home, about 75% of the home's value. So that means out of $1 million home, most people have only a $250K mortgage outstanding on that $1 million. When you average it out, right? All the mortgages, not just the people who got into the market in the last 5 years, but the people who've been in the market for the last 20 years. That's pretty low. That's really, so Canadians have a lot of equity in their homes, billions of dollars worth. And then this art, the banks here go on to praise themselves for responsible lending practices, and so on and so forth. And they talk a little bit about credit cards, and it looks like when it comes to debts, it looks like 15% of mortgage holders have increased their payments. 16% have made additional lump sum payments in the last year. So 30% of people are taking active initiative here to pay down their loans faster. 40%, 4 in 10, are paying more than the minimum requirements. Quite high. Very responsible for people to be doing that. So yeah, So I think you guys, we're in pretty good shape here in Canada. So don't worry too much. Don't stress about these kinds of online articles that warn about housing collapses, doom and gloom. We just did a deep dive here on the numbers. This is all accessible. Just Google CBA.ca and you can just look it up yourself. And rest assured, the Canadian housing market and the lending practices from the big banks are rock solid for the most part, compared to ourselves and compared to our peers. And if we're going to see a housing crisis and a crash, Canada is probably one of the last places in advanced countries where you're going to see it. Okay, thanks for watching, and we'll see you next time. Feel free to leave your opinion in the show notes below.